Well, hello there, my friends. Welcome back to Silverfest. Hope everybody's having a great morning. And fortunately, it is option trading time. I am joined by my good friend, Will McBride of the Market Chameleon, former Amex floor trader. So you were on the Amex. You were gone by the time we flipped over to the New York Stock Exchange, right, Will?
I was. We left in 2004. My partner and I moved back to Philadelphia. We'd started on the Philex. And so we traded off floor, streamed into the CBOE, the Amex, the Philex, the box, and grew from there. Now we are trading for ourselves and mostly working hard, bring in options, data, and research to Market Chameleon users.
Yeah, which is the option trading platform that you've built and what I use for my option trades in the silver market these days, some of which go better than others. But Will, maybe some point during our call today, if you feel like telling stories of what it was like on the the Amex back when the internet bubble was going on. I remember some of the guys that I clerked for, the Susquehanna guys, they would tell me that people would often like pay someone in the crowd like a couple $1,000 to go home, or they'd hire a high school kid to stake out their spot overnight because the trading action was just so wild that it was like ping pong balls flipping back and forth, and you had to be a moron not to make a fortune just because the order flow was that good. So by all means, we have an hour here, Will. So any trading story is probably more important than any of the other stuff anyway. So
we do have an hour, which is awesome. I guess the most interesting thing, I traded Rambus, which was Qualcomm, Rambus, Yahoo. I mean, all these
for that.
What's that?
I was eventually the specialist for that.
Were you?
Yep.
The specialist when I was there was Dom.
Yeah, after he left, the day they let him go, I had to fill his place.
Oh my God.
Yep.
They let him go, huh?
It was the beginning of 2008. By the way, if people have option questions, Will, if you see that in the chat, there's 3 chats. You'll probably see event stage and backstage. Click on the stage tab. That's for everyone who's listening here.
Gotcha.
Maybe we'll do a mix of telling stories, answering questions. I don't have any particular agenda other than to have fun and help people get some good information. But yeah, it was interesting. My first full year trading myself was 2007. I don't know. I feel my strength is more in calibrating once I have something up and running rather than starting. So I was very intimidated when I started, but I remember being excited because by the end of that year, I'd tripled the goal they set for me, and I was all excited for 2008. It was like finally sinking in. Of course, this was also when the financial world was melting down, so they were letting a couple of guys go and reshifting my role. So, I guess that's maybe part of how things go on Wall Street and why a lot of people leave and, enjoy the thinking that goes on there, just want to do it on our own terms like Will. So, yes, I was the Rambus specialist for a while, and certainly that was a wild stock to trade. And but anyway, Will, so you can share any trading stories, and perhaps just to start, and we can keep this brief, or you can share whatever you have to share, Will. But Will, you have a bit of a libertarian background, so it's like you knew how to sell gold and silver at least a couple of years ago before you ran into my circus. So you had a bit of a background. Then you've heard me talk about silver, a bunch of times since then. So I'd love if you could share just from your perspective where you see the silver market now, and then we'll just start taking some questions. They're already coming in. So,
well, I was very impressed with your speaker earlier this morning, James Anderson, and his slide deck. I don't know if everyone got their hands on that, but take a look at those charts of silver and what could possibly happen if these historical conversions take place. I mean, the price of silver, the price of the silver miners could I don't know, $50 an ounce silver. I mean, is that possible? Potentially. There's some interesting things to look at from different trades in the options. We can go over to Market Chameleon at some time and take a look at that. But personally, I was looking back to when we first, the first conversation we had, and I built a watch list with you on the silver stocks. And if I had just listened to you and actually bought the stocks, I mean, my returns today, because it's that watch list was built on that day. So all the miners have had big runs. So people, you know, I think the recent move in SLV and the sell-off in the miners probably has to do with more of some profit taken than anything else. And listening to James this morning really made me go back and look at where the opportunities are to the upside. And we can look at some things in the options on how to take advantage of them in both the miners maybe or SLV. That's basically, I don't trade the futures because Market Chameleon doesn't represent any data or information on the futures. So what we look to trade, what it trades on the options exchanges, basically.
Well, go ahead.
No, that's it. Thinking about silver in my head, and
can't help it. It happens.
From a libertarian standpoint, I do believe everyone may want to have some actually either some junk silver, some coins. I know, Chris, you have a safe of silver bars you like to sometimes broadcast from. But whatever you can do to have something in a safe location isn't the worst thing either.
I think that is good advice. And Will, I'm going to pull up a screen share. Let's see how this goes of the Market Chameleon site. So folks at home, if you double click on that, you can make it a little bit bigger. And Will, I think it's interesting. Can I get the... I have a 1 year. I wonder if we can do a 30-day. It'd be interesting to take a look at the vols. Here's the vol of First Majestic. Early September was up to 78. Now down to 73. So not surprised the vol would have come in the last couple of weeks, given that, you know, silver's kind of hovered a little bit for now. And Will, I have the first question, and then I promise we are really going to get to the questions in the audience because they're coming up quick. But what I think a lot of people who trade options don't always grasp, you know, they get the directionality, like if I buy a call, you know, the stock goes up, that's good. If I buy a put, if it goes down, that's good. But it's really volatility, because that can be hedged out. But you could have the stock not move a darn place, but if you have options and the vol gets pounded because silver sits there for a while, that can really affect your P&L. Maybe you could just start by explaining that one a bit more for folks.
All right. Well, why don't I share a screen so I can walk through? Unfortunately, I can't.
It is all you, sir.
Can you see that?
I can.
Awesome. So we are on silver, actually, we're on the landing page of Market Chameleon. So if you go into the up right-hand corner and you were looking at First Majestic, right? That's AG.
Yep. So
you come to the summary page of Market Chameleon's data for First Majestic silver.
Will, may I interrupt you for one brief moment?
Yeah, sure.
This is an easy one, I think, to answer real quick. Leftist Tears Investing says, what's the best free tool to see option chains, bid-ask spread, and open interest? Do you know of any place for that?
I know. Yeah, right on this site. So if you go down the left-hand corner to options, click on that. And the first line down is options chain. There you go. So there's your free option chain for First Majestic. All the expirations are here, so you can navigate the expirations. You know, I was looking out in January and looking at the vol, and there are opportunities there. One thing I like to look at is maybe doing a risk reversal. You familiar with that? Chris, am I still alive?
Yep, you are. Sorry, I had my mute button. I do remember the risk reversal from back in the day, buy, call, sell, put, kind of synthetically like a stock position.
Yep. So we will look at strategy benchmarks right under the options chain. And we've benchmarked all the strategies and back tested the data. And this is kind of where you were asking about the volatility and where the vol is relative to historic. And the vol goes into the pricing. So you can look, this is the risk reversal with a 30-day maturity. The 52-week average you're going to have is a 4% debit. Right now, it's a 6%. So the short term, it's more expensive to put on this risk reversal than the 52-week average. But if you go down, I was looking at so many things. If you go out to, let me click on the risk reversal. I was on the summary page. Sorry. If you go down to the 60-day maturity, so 60 days out, it's actually right at its 52 average. So not a bad spot to put on this risk reversal at a 7% debit. So it's just a real nice place to look and see if you want to take advantage of the options and, you know, put more, it's more risk obviously than just buying AG. It's a good spot to do it right now.
Yes, Will, if I may hop in for a brief second.
Yep.
By all means, this is not the same as buying silver bullion, gold bullion. This is not the same as buying mining shares. So full disclaimer, this is risky. This is speculative. You know, if you hit there's a million different things that you can do with options. So again, I just want to be clear about that, issuing a disclaimer. This is research, not legal financial advice.
Definitely.
So
thanks, Chris.
It is a very different risk profile that we're talking about here with the options.
It absolutely is. But if you look at the benchmarks, you can go through most of the strategies that are available, every straddles, strangles, debit spreads, and kind of see where the strategy's benchmarking right now to a 52-week average and get an idea if it's a good purchase, a good sale relative to an average. So it's the only place in the market where you can see that. But back to the options chain, what was he asking for within the options chain? Volumes.
Leftist was just asking for the best free tool to see option chains, bid-ask spread, and open interest. And Leftist, Will's work, Market Chameleon is what I use.
All right, yeah. So for the open interest, the bid-ask is right here. The bid, the ask. That's of the calls on the left-hand side. The strike is in the center. On the right-hand side, the bid and the ask is the puts. And if you go to the left-hand corner of the options chain, it's on the delta right now. You can go to the open interest, and that shows the open interest at every strike in the month. Yep. So you can see here in AG, we're looking at the September 11th, which is expired on Friday. But if you go out, to January, you can see kind of where the buildup is in the open interest. And certainly there are some call buyers who are owning up to 7,000 of the 25s are owned, which is pretty amazing.
Yeah. And Will, did you notice I'm wearing my first Majestic polo shirt today?
That is a nice looking polo shirt. You see, I'm wearing my Think Vig Market Chameleon shirt.
I don't know if I've ever seen you wear anything other than your Think Vig Market Chameleon shirt.
Always thinking about the edge, Chris, trying to find out.
One of those guys has like 7 versions of the same suit, wears every day. It's a different one, but you got 7 of those T-shirts, but that's it.
If someone can go to...
And where do I get one of those? Where do I get my Think Vig shirt?
Yep, I was going to say, go to marketchameleon.com YouTube and find the last episode that I wasn't wearing a Think Vig shirt. send me an email, williammcbride@gmail, with that episode, and I'll send you a Think Vig shirt. How about that?
All right. And I'll ask if any of my kind friends in the audience could tell me which episode that is so I can cheat a little bit. That would be greatly appreciated.
Yeah, there are quite a few episodes where I forget to put on my Think Vig shirt.
Well, I'm showing up at your house in the next couple of weeks, maybe with some silver. So I'll just.
I've got right next to my.
Flying around, who knows?
Right next to my home office, you'll be staying in the guest room. It has the same view of the pool here. Yeah.
You got a pool in the back. Is it still warm out there?
It's heated by the sun. We're solar here.
All right.
So it is still warm.
Cool. Well, I'll let you finish up what you were saying there. I'll stop making jokes, and then we'll get back to some more questions. So again, continue, please.
Well, that was it, the open interest, but also there you have all your Greeks you can check. I mean, we were talking about the vol early, so you can see what the vol's doing at every strike. Could
you explain what the Vega measures, Will?
The Vega is the vol. That's what it's the math behind the projected movement of the actual option.
Or in other words, for each point the volatility goes up or down, Vega is measuring how your option price would change.
Exactly. Yep.
Been like a decade. Sometimes I'm like, I think I remember what these Greeks do. So thank you.
So what else would you like to look at on the Chameleon? Well, actually, one thing I'll show why I got it up, because this is interesting. I think, what was it, like 2 years ago we first talked, maybe a year and a half ago?
I think it was about over 2 years ago, I believe.
So if I go to my watch list and look at silver, I built this with you.
Oh, I'm honored. What's that for silver, Chris?
Look at that when it was added. AG's up 109% since you had me add it. Pan American's up 150%.
I was due.
Silver, I mean, if I didn't just build the watch list, if I had actually gone out and listened to you when you first talked to me about silver. Super interesting.
You can stick around Silverfest for the rest of the day, and I think you'll see why. Now, the thing with options, you have that timing component, which makes it a little trickier, and but I think you'll see why. I still think we're in the. I don't even know if the managers have gotten out of the dugout to give their lineup card to the umpire, let alone have we started the first inning. But Will, how do you feel about taking some more questions?
Shoot.
All right, we have Mike Brown asked, where can we get silver option trade picks if we can afford to roll the dice for leverage? Perhaps that one is to me. I do not give option picks at the moment. Again, a variety of different ways you can do this. I'm trying to time the big move, when that happens. Although, Will, I'll let you comment on that. Although one thing you and I have talked about is getting an options program up and running. And by the way, if you have comments on this, we get a lot of questions. I've been thinking about something maybe like once or twice a month. We do a call. I can explain what I'm seeing in the silver market, any trades I'm doing, and then just take questions. Will, we've talked about that. And again, folks in the chat room, this is actually a great place. I've been trying to figure out how we can set something up so we can do this more often. Although, Mike, I do not give out specific option picks at the moment. Will, anything you'd like to add to that?
I do not give out picks either. What we do at Market Chameleon is show what the data shows and what we've looked at in the past. So it's a resource for Chameleon users to use to scrape the data and find opportunities that they think they're comfortable with. I'm sharing a screen now. This is SLV. You come to the SLV page. These are the trade ideas for best option strategies for SLV by theoretical edge and win rate, which is something we used to trade ourselves. And if you're looking for something bearish or bullish or by win rate, you would just go here and search. So if you look at a bull call spread, these are your best bull call spreads by win rates. And remember, this is based on past data, so it doesn't guarantee anything, but it runs the data and shows you what strikes, expiration. You can actually pull it down to the options chain. So it just gives you a resource, a tool to go through and analyze the trades by the data. So, but picks, I don't know. Everyone has to do their own research and be comfortable with the risk within their trades.
I think that's great advice. And why I phrase a lot of the things that I do in the way that I do, because I think there may be some point where we get to that. And again, share your comments. If you have any thoughts, this is to the audience, of what you would like in some sort of options program like that. So we're thinking about the right format, Mike. Two questions kind of connected here. Stanley writes, Silver Leaps, how far out of the money for strike? How far dated for expiration dates? Any recommendations for names? And Peter says, long out of the money calls on First Majestic. Seems like great risk reward. And yes, I agree with that. Stanley, to your question, how far out of the money, that's going to come down to your individual, what you think is going to happen. So, I mean, personally, I felt for the last 10 years, this is headed at some point, you have some sort of failure to deliver, COMEX fracturing. Maybe we're starting to see that now. If you think that we're going to wake up one day and silver's going to be like $50 higher than the closing price on a Friday, Will, maybe after Silverfest, all the people who are watching this and watching your option call, they're going to go load up on silver. I do think we're in that environment where if you told me silver opened up at $70 tomorrow because something happened over the weekend where you finally had a failure to deliver on the COMEX, to be clear, I'm not saying that's going to happen tomorrow, but I certainly think we're in that phase where that's a possibility to me on any given day. That's why I do the show, to try and hopefully in advance of that day know when that's going to happen. But if you expect a big move, then the further out of the money you get. So Will, if you, let's say, I'll take a look at, by the way, folks, you can either double click on Will's option screen there, or you can go, I just typed the link, marketchameleon.com, into the chat window. You can go there if that might be a little easier to see. So I'm going to pull up the option chain. And again, if you type in AG, and I'm going to look at the October 16th of 2020 board. So you see there, the farther out of the money you go, the cheaper the options are. So let's say we look at the 20 strike on First Majestic in October, primary expiration on the 16th. The 20 strike is 9-cent bid, 11-cent offer. So to put that in perspective, let's say First Majestic had a big rally, but it went to $19. We'll say $19 on expiration, not prior to expiration. So we just look at the intrinsic value, obviously. Now, if First Majestic went to $19 tomorrow and you had those October calls, even though they're still out of the money, you'd win quite big, because as they trade higher, it'd be much higher than the 10-cent value. But let's say we're a day before expiration. So it's close to expiration. If First Majestic's at $16 or $17, those 20 strike calls probably going to be worthless. Now, on the other hand, let's say there was a failure on the COMEX or something like that, and silver opened up $70 and First Majestic was trading $70. You would win a lot more by owning the 20 strike because it's cheaper. Will, I'll stop in a second. You can comment, but maybe you could help put this in perspective where once you go past 20, if you go far enough, because you bought the cheaper option, you're controlling a larger number of shares, but it's dependent on how far it goes. So maybe if First Majestic went to $21, you'd be better served buying the 18 or the 17 strike, versus if it went to $70, you'd want the farthest out. Yeah, I mean, the 22 strike, the intrinsic value of that is going with $70 First Majestic is going, and that's fun to say, $70 First Majestic. But even though the intrinsic value of the $22 strike with a $70 stock price is going to be slightly less than the 18 strike, you're controlling a lot more shares as you go through 30, 40, 50. Will, I don't know if I'm explaining that clearly. Perhaps you could put my clumsy words into better context for folks than that.
Well, I think what you're saying is that you can, if you put, paying 10 cents is cheaper than the next strike down paying 14 cents, the next strike down. But I look at that. I look at the 20 line where you're paying 10 cents. And then I look at the 15 line and it's 30 cents, right? So whatever money you're going to put to work, you get a third less shares paying 30 cents. But imagine that stock moves through 15 to 18, right? You're now in the money $3 and it's cost you 30 cents. I mean, the return is wonderful, right? And this expiration is only 25 days left we're looking at. And it doesn't blow through. You've now spent, that 10 cents for the 20 line and it's expired worthless. So I don't know. I look at this options chain. Can I share my screen again?
You sure can.
I'm sorry. I'm new to this package. So it's
doing great, my man.
Yeah. Trying.
So that's the part of the fun part about being an options genius. If you're more on technology, people bear with you. So
options genius is
right.
for Dimitri, my partner. I'm a survivalist.
We could get a T-shirt made up for you. I'm with the option genius. You could have like an arrow point to. Well, then you'd have to decide which side of Dimitri you'd like to stand on. For everybody watching at home, you may have met Dimitri. We've done some calls with him as well. That's Will's partner, another good option trader. So anyway,
best I know, that's for sure. And so anyways, we're looking at this AUK expiring the 16th, which is 25 business days left. You see that at the top of the options chain. So you were looking at the 20s. I'm looking at the 30s. Now, when I look at those 30s, a nice feature with the options chain, you click it in, you can put in the option you're going to do. So we'd buy these AUK expiring options, and we'd pay, right now it's, 30 cents? If it goes, you can then load the strategy. So you can see, actually it's paying out. So you start making money at 15.30. You're up 125% if it goes to 16.50. And if it stops there, and you would instead bought the 20 line, those are going to expire worthless. So just think about how things move. That, going to 30, going to 40, it may happen overnight, but it tends to be like a push, a pull, a push, a pull. So I think I would go lower down the chain if I was looking at that. And again, I mentioned the risk reversal. I see that 30 line. If you do like silver long term and you have money in your account and you're going to put a position and you could take delivery of the puts if you sell them, you could sell this 10 line put for 34 cents. We'll load that strategy. That is the risk reversal. And you're getting paid to put that on. So as long as you're willing, your downside risk is at under $10, you have to take delivery there. As long as you're comfortable with the number of puts you sell that you can take delivery of the stock, this strategy to me also looks somewhat interesting.
Yep.
that's taking advantage of the leverage of the options. And but it's an interesting thing going through the chain and kind of feel out your risk reward and what you think you want to put on and how you want to pay for it. Do you just want to buy the calls, or do you want to finance the calls maybe with some puts? Or do you want to go and just do a credit spread where you can actually take in a credit and you know exactly where's the bull put spread? You can do that for credit. So if you go here, these are all bull put spreads. So all of them are going to be put on for you're going to take in money, and you can see the win rates. There's some opportunities there to put on a spread, take in some money, be bullish the underlying. Actually, if you click in the upper right-hand corner, these trade cards, it gives you a full report of the trade. So there's a lot of information to look at and make your own decision. You know, it's not a pick service. You have to decide, do you think the underlying, in this case, First Majestic is going to go up? Where do you think it's going to go up to? I look at like buying those 20 calls as maybe buying a lottery ticket, which, you know, could happen, could be a winner, but there are ways to, you know, hit constant singles, doubles, you know, every day in the options market. And the Chameleon gives you the tools to make, you know, smart decisions.
Yes. And I just realized my...
I think we lost Chris, everybody. Can you still hear me?
Yep, I'm back. I was realizing my microphone, I have it sitting here, but it wasn't synced up correctly. You hear me all right now?
I do.
Maybe even a little better than before, perhaps. Anyway, yeah, I appreciate what you mentioned there, Will. And to be clear, yeah, I mean, if you buy the 20s and silver explodes overnight, you know, then that works out great. The counterbalance to that, the price or the cost rather, is that if you say like, when is silver going to go to, which month is silver going to go nuts? I mean, there's obviously if you try and pick any particular month, unless, you know, I don't know, we have some information that's actually going to happen. I mean, the odds are more likely that it doesn't happen just because at any given particular point in time, I mean, some chance it happens tomorrow, but it's less likely than saying in the next 5 years. So Mike has a follow-up question, though. If you knew silver would hit $35 next Saturday, the 18th, which, given that the Fed has another meeting this week, I wouldn't rule out. If it were you, hypothetically, all right, so not licensed financial advice here. Let's see. So where is silver? What did it close at on Friday? It's 26 something, 26.75-ish, let's call it. So in Mike's scenario, we have an $8.25 move in silver. So I guess, Will, this could be fun. We can have a couple of answers. I mean, first we could look at something I've been thinking more about. It's kind of got pounded in my option trades in the last month or two, because you can have a big move in silver. And someone asked before, do you use SLV or the miners? You can use both or either. For the most part, I've been placing my options on the mining stocks, which, Will, did you know Silvercrest and First Majestic were actually trading lower at $28 silver than when silver was $18?
I had no idea.
So
that's incredible.
You know, which I think seems a little bit out of line, and that's the difference with owning shares versus owning options. If you own the shares, then it really doesn't matter when other people, perhaps, if they notice that and eventually agree and price it differently. So you have two choices right off the bat. You know, if you knew silver was going to be 35, but I wonder if silver went up another $8. Will, maybe you have some thoughts on this. My best guess is that some of these mining stocks, it might be rather binary, similar to what silver did, where it sat under $20 for 4 years. And then when it finally moved, it moved big in a very short period of time, not for any particular reason, perhaps, that's been public at that particular time, but just sometimes these things go when they go. I wonder if we may not have like almost like a double short squeeze stacked on top of it where, I don't know, I wonder if these mining stocks will just be one day for not any particular reason other than, I don't know, maybe some guy in, Cleveland woke up and he's managing a big fund and happened to find, hey, silver looks out of line. Any thoughts on that, Will?
Do you play the miners or do you just play? I mean, are we answering a question or playing hypothetical to the miners?
Well, I guess just, does that make sense that, or at least as a possibility that, the miners have kind of sat there and probably it'll just be at some point, maybe when third quarter earnings come out, but there'll be some point where you would think they would move almost in similar fashion to what silver did after 4 years.
You would absolutely think so. I mean, it is amazing what you just mentioned about First Majestic, that it's trading lower with higher silver prices. I mean, that seems like a gap that has to be made up in a big way.
Yeah. So back to Mike's scenario, if silver hit $35 next Saturday, well, you have two choices. I don't know which one is right, but I'll lay them out for you and you can decide for yourself. If you knew 100% silver was going to move, then we can look at the SLV board and you could get a pretty darn good idea. Now, if silver moved $8, there's a chance that First Majestic and some of these stocks could actually be down, as we saw. So there's another variable there. You would think, I guess that was what I was just getting at, that at some point they would explode. So on that $8 move, I don't know, there's some percent chance that the miners don't respond the way you would think. And I think there's also some percent chance that you get an exponentially larger move in the miners. I think it's overdue. When it happens, if I figure that out, I'll let you know.
You would obviously place your money in either a silver future or in the options here, and you would probably take something right near at the money, so it becomes stock right away. And if you had the ability in your account, you would sell puts and finance it as many times as you. I mean, if you knew for certain, right? That's what you would do. And then the day after you won, you would then, if the miners hadn't moved, you'd then take a position in the miners. I would think, but
see my screen there, Will?
I do.
All right.
It's
so
small.
Said,
it makes me squinting.
Mike said next Saturday. So we will look at. Fortunately, Will, I loaded up on some September options. I don't know, maybe a month or so ago, in case the September silver deliveries knock this thing off the tracks for good. So far has not happened. I still have a chance. I mean, my favorite joke of the weekend is imagining this week's Fed press conference, since they've already done unlimited QE, held interest rates at zero forever, and now they're changing inflation targeting, whatever that means. I think the only thing left they could do to outdo that in the September meeting is actually send Ben Bernanke out in his helicopter to drop $1,000 bills. Which, Will, did you hear the news? I do have 3 artists who now claim they can actually make that into a silver figurine form of Ben Bernanke. We call it the Chopper Silver Ben. Get a nice paperweight on your desk of Ben Bernanke in silver throwing $100 bills out of a helicopter. I'll give you a second.
Let me know when you're taking pre-orders. I'd like one.
All right. Yara, can you add Will McBride's email to our silver figurines list? And perhaps anybody else wants to be added to that. I know it's important stuff. But anyway, let's get back to silver here. $24.90 on the SLV board. And let's say things get wacky, the Fed and, maybe JP Morgan, or maybe the CFTC wakes up, realizes it's a rigged deal. I would say on a $35 move,
or a move to $35. Let's see. Spot price again is $25. And Will, I think you have a tool. We've built a spreadsheet for anyone who remembers the calls we did with Professor Chen, who unfortunately could not be here today. Been building a spreadsheet that kind of looks at this, and you can put in, all right, here's the price, 4 cents for the 28s, 5 cents for the 27 halves, and you can see, all right, if silver is $35 at expiration, you can really compare and look at how much those are worth. But I'll even attempt some guerrilla math here. So, Will, perhaps you can be my out loud conscious and keep my math on track. If we look at the 28 line, is 4 cents offer, right?
Yes.
So if silver ended at expiration at $35, that means intrinsic value is, Will?
You're looking at the 28 line?
Mm-hmm.
So that's going to be, what, $7?
That's right. So if you have something worth $7 that you paid 4 cents for, Will, am I correct? You'd have 175 to 1 return.
That's a nice little return.
So think about it like this. Let's say you spent $1,000. Keep in mind each contract is for 100 shares. So I just moved the decimal place over. So again, we'll keep track on my math here, please. And one of these days, I'll get that spreadsheet out that does this for you. Wanted to make sure it's correct before sharing it. So, Will, if you're paying 4 cents for a contract, which for 100 shares means it's $4, so 1,000 divided by 4 equals 250 contracts, correct?
That is correct.
So you're spending $1,000, and then each contract at the end, so you have 250 contracts. I'm going to try and keep place of my decimals here, times, I think it would be 700, representing $7. We're moving the decimal place over. Yeah, so I get that your $1,000 would be $175,000. That sound right to you, Will?
Sounds close.
So obviously that's quite a large return, which would be quite glorious. And the reason that it's priced that way is because, it's not, I don't think it's impossible to have something like that happen, but the probability that silver does not get to $35 by next weekend is higher than the probability that it does, in my estimation. I don't know. Maybe JP Morgan knows they're about to let it rip. And that's why I search for the clues on it. This is essentially what I've been doing for the last decade of my life. Looking for the clues, hoping that similar to like Enron or Bernie Madoff, that, if you know it's a Ponzi scheme and you know something has to happen, I don't know, maybe we'll have, I've always hoped I'll be able to see something that says, Chris, this is happening now, put this on big. We'll see if it goes down like that. But let's take a look, Will, at the 27 line, which is 7 cents. That sound good to you, my friend?
That sounds good. Hey, Chris, just when you're playing around with it, one thing you could do, like, let's go back to the last example. Click on that line you bought. What was it, the 28 line?
Yes, sir.
If you click on the offer like you're buying it, it should populate the strategy below. Then you hit load strategy. You see that? Load strategy. Now yes. You can show us 3 standard deviation move. If you go, it says chart display settings. There's a standard deviation move there. Click at the 3%, load the strategy again, and it will give you a 3 standard deviation move. It shows, I don't know.
This one?
Yeah.
Okay.
And then you walk yourself along the line, and it will show your return right there.
All righty. Well, Will, perhaps in a moment, I think you have this in there, is there a way that instead of just my gorilla math here, we could show two options being compared? So the 27 line and the 28 line, and we can say spot price is $35 on expiration. If we pay those prices, is there an easy way to do a comparison on here?
It's not really easy to do. You can do this one and then you could do another one and kind of see the returns. You have to kind of walk through it.
Maybe after I get to proof that spreadsheet that we've been building with Renra, I don't know, perhaps that's something we could add into the Chameleon maybe.
Yeah, certainly if your followers and you think the silver community would be super interested in something like that, it's something we could definitely work on.
I'd love to have it in your site, know that it's been proofed. I mean, I'm always thinking, is there, some formula that's off in cell 3? So, I mean, that'd be something that I'd love, where walking through this math we're doing here, I think that would be great. I think people would really find that useful. So let's take a look, Will, at the 27 line, if we may. So what's the offer you see on the September of next week, the 20 line?
The 20 line, I see the offer. The 20 line or the 27 line?
27.
I see a 7-cent offer.
Okay. So now if the stock price is $35 at expiration, what is our intrinsic value going to be?
You tell me. My morning math right now is not good.
All right, I'm calculating $8. I don't want to hurt your brain there. And one thing I'd just like to point out, if I have it in mind, let's say we were going a little farther out and we were looking at the October 30 line or something. There's a big difference between if the spot price goes to $35 today versus $35 on October 12th, right?
Yes.
So keep that in mind. I guess we can't cover entire option world in 1 hour, but again, you do have the time premium in effect here. But let's finish up this example. I want to get to a couple more questions. So if we buy the 7 line or the 27 line for 7 cents, and spot price 35 on expiration, that means our intrinsic value is $8 divided by 7 cents. You would have a 114-to-1 return. So,
and your last return was what?
175-to-1. So that's how you can at least walk through some of these. Again, we could go for lifetimes, calculating different option possibilities. Fortunately, Will's site does a lot of that for us. Then you could, and what I've built in my spreadsheet, Will, is I think will be handy when it's ready, is some conditional probabilities in that. All right, let's say silver goes to 35. We could put in 100% obviously, it's not very few 100% probabilities. Other than that, the Fed will print more money going forward. That's maybe above 100%, setting a new historical statistical record. But let's say, again, in Mike's example, we're assuming that, it's going to be $35 by next week. You could say, all right, we'll say 100% of that. And in that scenario, there's 10% chance First Majestic's here, 20% chance First Majestic's there. And you can do the same exercise on some of those prices. So, Will, did I explain that somewhat clearly, hopefully?
You did. When can I get a look at the spreadsheet you guys have created?
I can send that to you when we're done, especially if you'd be kind enough to remind me.
Yeah, I'll send you an email.
Send spreadsheet to Will. And Mike asks a great question there. I can see doing that once a month for 12 months, $1,000 losses until you hit 175 if you know. And that's exactly what I've backed out on some of those. If you go to the channel, you can find several calls I've done with Will. That's essentially what I do, is I look at it as an insurance policy where, if I'm willing to spend X per month, whether it's $1,000 or whatever it is. So, Mike, perhaps one way of looking through it, and this is mapped out, and again, in those past calls, you can email me or ask Yara, and we'll help direct you to that. But essentially, we've been backing out the math so you can get, I look at it as an insurance policy, and you're getting the premium as low as possible. So if you did that trade and just put it on every month, so now I guess in the example, then to be clear, the example we gave there, you were doing that for a week. So if you wanted the month rate on that, you would multiply that times 4. But let's say, just to make it simple, let's say that those numbers I had done before were on a month rather than a week. So you'd spend, if you were still getting 175 to 1 multiple, then the way I would do the math on that is like, all right, if that were month coverage, then for a year would cost $12,000. So for 2 years would cost $24,000. So I can say, what is 175 divided by 12? So if that were the price of a month, you would be able to put this on for 14.5 years. And if it happened at any point in that time, you would break even. Again, what I think is nice is that with this type of scenario, if we are close to a true fracture in the COMEX, you also have upside on top of that, because maybe silver goes to 35. If you have a COMEX fracture, if silver goes to $70, let's say you just for fun, since we're here, I'm going to show one more example. Although I guess one thing to keep in mind on that example we gave, you don't necessarily, I wouldn't say you need a true COMEX failure to get to $35. I mean, that's plausible. I mean, in fact, I'm going to buy some of these tomorrow with the Fed meeting. See, now, let's say you had silver even go up $3. Now, it'd be different now with a week out. If silver went up $3 tomorrow, you'd be doing pretty well on these calls. In fact, how you can look at that. So, spot price $25, and we'll call it 25. So, Will, if the spot price went up $3 tomorrow, let's say you bought the 28 line for 4 cents. Here's a way of thinking what you would get a return. So if the spot price went from 25 to 28 on Monday, which would be much different than if this happened on Friday, but let's say the vols stayed relatively the same, spot price goes up $3, then that would mean that your spot price would be, let's call it $28. So the at the money call, just as this is a rough comparison, but right now the at the money call is about 50 cents, let's call it. So if we're buying the 28 line for 4 cents, but tomorrow, you lose a day of premium, but the thing goes up. I mean, at least that's a ballpark estimate. Will, would you agree that, maybe a little less due to decay, but maybe vols go up, that if silver went up $3 tomorrow, it's at least an approximation that you would go from 4 cents to 50 cents, which would be, what's that, 12.5x?
Yep.
But
let's be serious. If it moves like that, the vols are going to be up, right?
Right. You'd probably get greater than 12.5 on that. And again, I would say with, especially if the Fed meeting were tomorrow and Jeremy Powell said he wants a 10% inflation target, I don't think you need a COMEX failure to have silver go up $8. We saw a month ago it went up $8 without the COMEX failure. Could that happen again?
In how many days did it go up $8?
I believe it was about a month.
All right.
In
What do you think
1980,
this COMEX failure you have been talking about? What do you give the delta of that happening?
I personally think it's inevitable.
So you think it's going to happen?
That's why, similar to what Mike asked there, I've been backing this out where it's like, all right, I can take the emotion out of it. Just every month I put whatever amount. I'm prepared that I'll lose 100% of that premium, and I'm okay with that. If my underlying assumption is correct and the failure is inevitable, then it really just depends when it happens, but I can back out the math so that you're good to go. So real quick, we got a couple minutes left. I just want to get that one last. Let's say that COMEX failed. The Fed, sends Bernanke out in his chopper, and it's just insane. And COMEX fails. Someone asks for metal, it's not there, and you have silver's at $70 by the end of the week. Again, just to be clear to everyone, I'm not saying that's happening. This is a hypothetical example. But now, this is where in a true COMEX failure, what happens with SLV is the metal there. So you'd factor in some risk premium. Any of these things you can put percentages on, back out the math. Renra is going to help us get a little more sophisticated in the model but again, so let's call silver $70, which means 70 minus 25 is 45, if I remember correctly.
That's math.
Yay, I survived public school and I can still do that. So let's say, but we'll look again at the 28 line. That's 4 cents. So 28, I guess we need the 28 line. So that would be $42 would be intrinsic value, right?
Yep.
So if we take 42, again, I'll move the decimal place. So you can do 42 divided by 0.04. We'll do that. $42 is what you bought this contract. It's worth $42 now, and you paid 4 cents for it. So your return is $1,050, Will. So that means if you buy $1,000 worth of the SLV September 28th for 4 cents, and the COMEX failed because of Bernanke by expiration, your $1,000 would be $1,050,000, which would be a decent return, right?
I would say so. I'm going to look at these Monday myself.
If you hit anyone who hits that, I think you get invited to Will's pool. Even if it's winter, we'll build like the one of those retractable domes over it, so you can go swimming. We'll get some lights in there, keep it nice and warm. So I mean, that's the thing, again, that's what I focus on. The big move, as Will, you pointed out. I mean, you don't have to go the extreme. If people want to go for, hey, I think there's going to be a $1 or $2 rally in silver. There's other ways to play it, and hopefully we'll dig into a lot more of them. Will, I know I talked with your brother Adam about making like a standalone options for metals course. Anyone type in the chat room if you'd be interested in an options for metals course, where I was thinking about just getting some of the great stock analysts we have, like, Jeff Clark or David Morgan, and say, hey, what do you think is going to happen, or what stock would you want to look at, and then have them ask their option questions, and also that ongoing program. So we're getting more things available, and we'll keep you posted. Again, if you'd like to send a message to...
Wow, a lot of yeses.
Oh, is my thing not scrolling down? Oh, okay, there we go.
A lot of interest in the silver options course.
I will tell you what, if you're interested in more option stuff, can you send an email to consulting@Arcadia? Please just put in the subject, add me to the options list. Please do not send option scenarios there. I cannot go through those at the moment. right now. We'll create a place to do that. Obviously, legal and time. I can't answer everyone's option questions via email. It's usually you see 2 scenarios. Took us an hour to describe here, but we're making an appropriate place to do that. So again, consulting at arcadiaeconomics.com, and just say, add me to the options list. And Will, I'm really excited. Again, I love what you build at Market Chameleon, folks. You can check that out at marketchameleon.com. And I think it'll also be a lot of fun to create things. I mean, what I love doing is giving people the tools so they can do the trades that fit them, but at least do it with good information and base and a place to ask questions and get things. And Will, hopefully you'll continue to partner with me on that.
Would love to help. I'm going to put a link to my Market Chameleon YouTube channel. We have, and I'm not going to tell you how many videos, but whoever tells me how many videos emails me, William McBride at Gmail. I'll send a Chameleon cup. I've got a few of these. My brother Adam actually wanted me to give Chameleon cups to people. So there you go. Email me with how many videos. And also, if you email me with how many pages in Chris's book, great book, Chris. Thanks for sending that to me. I will also send you a Chameleon cup.
And I'll tell you what, Yara, if you're listening, I'll throw in an ounce of silver when this is available on the channel. Anyone who tweets this out to the Arcadia Economics Twitter handle, which I think doesn't have an S. And Will, what's your Twitter?
I trade vol.
Okay, I trade vol. Find Will's Twitter handle in there. If you share this episode on both of those Twitter handles on Twitter, we'll pick one winner to give away a silver ounce for. Will, I don't know if you have plans, but we're going to go give away some silver in the First Majestic booth, who has kindly been a sponsor. I'm excited to be wearing my First Majestic shirt. They just had a massive investment from Eric Sprott, and I believe Mark and Todd are in the booth now.
Oh, that's
and Will,
great.
if you have some time and would like to take questions, interact with people, perhaps you have a little time, Will?
Unfortunately, I don't. I have 4 kids who are getting up now. I can hear them outside ready to jump in the pool, so I got to leave. So sorry about that.
That's all right. I see Jeff Clark has popped in there. Jeff, how are you, sir?
Good. Oh, sorry. Good. I just had my coffee, but I wanted to catch the end of that. It sounded very interesting, and then Todd at First Majestic asked me to jump in, so I didn't mean to interrupt, though, you guys.
No worries. You guys have a great episode. And a great day at the Silverfest. Great job, Chris. Thanks, everybody.
If you can stick around for one more second there,
All
Will.
Right.
When I was mentioning that options for metals course, it was either you or Maurice Jackson that I was talking to the day I thought of that. And that's kind of what I thought would be great, where, again, I sit here with my silver fetish. I don't claim to be, I'm learning how to analyze a mining stock. But what I thought would be great is get someone like you or David Morgan, where you already have the knowledge and a strong insight of the fundamentals of the stock. And then when you say, all right, I think this, how can we use options to express that? So basically, you could just ask me any option questions you have. I'll explain it. And I think that would be helpful for people.
Yes, because I think some stocks are better than others, and even in an all boats rise scenario, some will do better than others, and those are the ones we want to have options on, right? So definitely, that's a great idea. I love it.
I mean, another thing we can dig into is that essentially if company X has metal in the ground that has intrinsic value of this, on some of these sell-offs where, let's say even if you liquidated the darn company, it's worth $6 a share. You know, if there's some big premium on the 5 strike put, all right, and I sell the 5 strike, which let's say I sell the 5 strike put for 50 cents. That means my worst case scenario, I'd be buying a stock that has $6 of assets in the ground for $4.50, and most of the time you're not even going to get a sign, but we can map out the probabilities of all these things. And I think it would really be amazing to combine the different types of knowledge we have into this. and build some cool stuff. I'm also back testing on the days where we have a smash in the silver price. Are there any characteristics that commonly precede that? Can we get any? And you don't have to know. What's nice about options, Will, you don't have to know anything 100%, but even knowing something 80% versus 70%, it's like you become the blackjack table where you're backing out that math in your favor. And I feel like in our community, we just have so much knowledge on this situation that could really do some cool things. So hopefully you guys will both be a part of that.
That's great.
That's a great idea. I think the more we pool our resources, and utilize each other's strengths, it's going to benefit all of us, because, the silver community is a community. And so I want us all to succeed. I really do.
And I think that's what's nice about the vibe we have here at Silverfest. And Jeff, I knew you had other plans today, so it's quite an honor and surprise to see you back here again. Will you be joining us in the first Majestic booth, Jeff?
Yeah, that's what I thought I was doing. So again, I'm sorry I interrupted you guys.
No, it couldn't have been more perfect. Will, we're going to let you run and go make breakfast or lunch for the kids.
Keep them from drowning is what I'm doing.
I'll see you next month. Get my Think Big shirt ready. I'm going to show up on the way to New Jersey. And for everybody watching, fortunately, Jeff Clark and myself, we're going to go over to the first Majestic Silver booth we've been talking about. I got my shirt on. We can talk options, although perhaps even better than that, they'll be able to answer questions about Eric Sprott. Jeff will be in there. And we're going to give away some more silver. So we'll see you in there. And Jeff, I'm excited. You can ask him your questions. So head on over to the first Majestic booth, and I will see you there.
Have a great day, everybody.
Great to meet you.